welcome to Forex Focus, the show where we look ahead at the opportunities that could be setting up in the FX markets for the week ahead. And last week was a little bit of a slow week in the markets, with the dollar taking a much deserved break after its recent march against the majority of the majors. And whilst we don't think this is the ultimate pullback for the dollar, as we discussed last week, and hence we'll be quite cautious when it comes to any setups that involve buying the dollar, there are some opportunities that are presenting themselves in the crosses this week. So whilst we'll go over the charts, the majors, as we did last week anyway, to highlight those support areas that we're looking out for, we're also going to focus a lot of our time this week on the opportunities that could be setting up imminently. So let's start by jumping across to the Australian dollar. So as you can see here, the Australian dollar is at that support level that we identified last week. It took a bit of a bounce off of the level last week. We're not saying that we don't expect it to go lower towards the 0.7052, but of all of the majors at the moment, the Aussie looks like the one that is most likely to bounce from a technical perspective, because it's at a big level, which has been at since, let me zoom out there again, that level's been there since 2007. As you can see, the market has played with this level quite a bit, and it's there again right now. So we're expecting a little bit of a pop up in this particular pair, possibly up towards 80.72. But if it doesn't hold this level, then the next area we're looking at is 700 pips below it, 0.7014. The euro dollar has also been consolidating this week. We're still waiting for it to get down to the ultimate lows here of 1.0776, but it is having a temporary pause. And that's what I was talking about just now when I said, even though the dollar has been taking a little bit of a break against the majority of the majors, we still don't think this is the ultimate pullback. When the market comes down to this level, we're not expecting it to crash straight through. Now, that's not to say it won't, but from our perspective, we believe that after a massive move like this, so let me zoom in here on the weekly charts. So if you look here, just zoom that out, we've gone from one spot 3987 to 1.1133 without really so much as taking a breath. There's been no pullback here whatsoever. It's gone a hell of a long way, and hence when we get to a major level, we're expecting some sort of a pullback. We do expect the euro dollar to continue its downtrend into next year and the year after, but we are looking for the market to pull back a little bit to give us an opportunity to get in at much better prices, and I think the weekly chart depicts that best. So if we can get a bounce up from the ultimate low, well, not ultimate low, but the most recent low at 1.0755, we'll then be looking for a pullback towards a 1.1590 at the very least before we can take another shot at taking this particular pair lower. The New Zealand dollar, very much the same thing. So we're waiting to come up to this big level here at 0.7085, which was a huge turning point in the market back in 2011. We discussed this last week. It came back to this level. Let's just zoom in there a little bit. So we came back to this level at 0.7119 and used that as a sort of like a catalyst, a pivot to then rally all the way up to 0.8853. So that has gone a long way, almost 2,000 pips there in a very short space of time. And this is the first time we're approaching this again since the first time that it went long. So for that reason, we are definitely going to be looking for a bounce in the New Zealand dollar. As I said, this might be a little bit boring for you because we did discuss this last week. These are the setups that we looked at last week that were presenting themselves last week, and you know, the markets haven't got to it. So we need to remain patient. We need to remain focused, and that's a lot about what being a professional trader is all about. You know, you have to have the patience to wait for the market to come to you, and when the market comes to you, they are the trades that are going to make you the most money and going to give you the least amount of stress. If you try and chase everything that moves in the market, then you're going to find yourself coming unstuck and starting to lose money. So the pound dollar, again, we're waiting for this massive weekly low at 1.4812. The market isn't there yet. The dollar consolidated against everything last week, as we said earlier. So we're still waiting for the market to come down to it. The dollar CAD, again, like everything else, a little bit of a pause, but not really anything anywhere near enough for us to look to get involved in a particular trade. And the dollar CAD is one that we really, really like. So we're certainly going to be trying to get long when that presents itself. The pound New Zealand is something that could be setting up this week. It made an attempt to get lower last week, as you can see here by this sort of pin bar stroke spinning top candle, but it didn't manage to go any lower. And when it doesn't manage to do that, so you can see, let's zoom in here and just talk to you about the psychology of a candle. If you look at this candle here, okay, this weekly candle, at one point in time, that candle was extremely negative. It was all the way down here at 2.0342. It didn't manage to go any lower, and you can see that it actually closed, what is that, 2.0694, so 700, 348, so 350 pips higher than its lowest point. And that's, even though it's a red candle, that's actually quite a bullish sign. So we're expecting the pound New Zealand to attack these highs next week, and if it does, then we'll certainly be looking to take a short if the opportunity presents itself. The pound Aussie was something that we were looking to take short last week, and we actually got the opportunity. If we take a look at the day chart over here and zoom in a little bit for you, we got the opportunity on Monday, and I sat there with my brother and I said, what do you think? Should we look at taking this short? We then looked at the news that was due to come out, and the RBA had a rate announcement on that evening. So we said, I'll tell you what, let's leave it. If we come tomorrow morning to the markets, we open up the charts and it hasn't moved too far in either direction, then we'll get short. If it has, then obviously if it's gone too far to the downside, we will have missed the train, and there's just nothing you can do there. And if it moves significantly to the upside, then we would have saved ourselves some money, because ultimately taking a trade that close to a rate announcement is the same as just gambling. There's really not a lot in it for you. You're just taking a punt, buying a lottery ticket, and we're not in the business of doing that. So we actually ignored that one here. But it doesn't mean that this trade is off the table. If you take a look at the pound Aussie here and you take a look at this candle here, it's a little bit indecisive. It is bullish. Okay, don't get me wrong, it is bullish, because as we just spoke about with the pound New Zealand, at one point in time, that candle was nearly 400 pips below where it eventually closed. But having said that, we are at a huge level. So if next week we get a big bearish candle, then we'll be looking to sell that, and we'll potentially look to sell it for 500-600 pips down towards the 1.8698 area. So we're going to keep this on our watch list. We're going to keep our eye on it for the week or weeks ahead and just see how it reacts to this level. Then we come to the yen pairs, and the yen pairs, very much like last week, we're just waiting for them to attack the lows, the support levels, and when they get down there, then we'll be looking to get long. The pound yen is looking like it's breaking up at the moment, but there isn't really an opportunity for us, or not one that we like anyway, to take this higher. We would prefer it to have a little bit of a pullback to this ultimate support here, where we can get in at bargain prices. Remember, we don't want to be chasing the markets. We want to be getting in with the the lowest risk, highest probability trades, and for that reason we need to wait for the market to come to us. And I know that's difficult, guys. I really do know that's difficult, because you feel like if you're not in the markets, you're not making money, so you need to be in the markets all the time. But what you need to remember is that if you're not in the markets, you're not losing money either, and it's about growing your account. All right, so you have to be patient in these circumstances. The New Zealand yen is coming down to this level here. It hasn't quite reached it yet, but it is coming down to that level on the weekly chart, although it did have quite a big pop up last week. And the CAD yen is much the same thing. We're coming down to this level here. It hasn't quite got down there. We are going to wait for the market to get down to that level, because after big moves like this, you need a real reason to be getting into the market. This, we're just trading in the middle of thin air. We want to wait for it to come to the big level. And when it comes to the big level, that's where we'll be looking to take it long. So now across to the pairs it could be setting up for the week ahead, and the trades that we're looking to get involved in. On Friday, the dollar yen closed at this trend line over here. As you can see, this is the one we highlighted last week. We said we only want to take this if the market breaks out with momentum. It looks like it did that last week. We're just going to wait now for Sunday's candle and through Monday to break through these highs here. If it does that, we're going to look to get long the dollar yen, and we'll have our stop below the lows here of this triangle at 115.17. We'll then be looking to attack. If I zoom out here, we'll be looking to attack the 123.97 area. So about a 1-to-1 on that trade initially, but you know, we don't want to strangle the trade. We believe it will go up there, but we need to give it time to room to obviously achieve our ultimate goal. Now, if it gets above that level, then we can start looking at 12673's area, but we need to wait to see how it reacts at that level. The euro pound is one that we talked about last week. We're looking for some consolidation. It's now consolidated. If it breaks through these lows here, we're going to be looking to get short with our stop above it 0.7604, and the initial targets are going to be towards 0.7227. If the market gets down there and it starts to consolidate, we'll be taking the position off the table. If it smashes through there, then we'll give it a little bit more room to run and maybe go for another 100 pips on the trade. But it really is about how the market approaches that level. So we'll have to wait to see how that sets up next week. The Euro New Zealand is an interesting one. It's a bit of a shorter term play, to be honest with you. If you take a look at the weekly chart, it's just an absolute disgrace. It's a complete mess. So there's nothing really to be gained from looking at this chart here. Looking at the daily chart, if we zoom out a little bit, you can see that we've come to some lows. The market's failed to break below the lows, and this is what we're talking about with some of the other trades. When we come to a big level, the market will break through the level. If it can't hold beneath that level, you know, then that's quite a bullish sign, and that's a sign that the market might go up. Now, the Euro New Zealand is at the 1.5384 level, or around that area. Sorry, so if you drill down into the 4-hour chart here, we're at the 1.5351. And ultimately, if we can get above the 8-1 level, okay, so the market can give us a little bit of a bounce here. Maybe we'll look for a 1-2-3 reversal at this level, giving us an opportunity to go long. Then we're going to take that, because if you look at the daily chart, we're at quite a significant support area that's been support here back in 2014. If we go back again, it was a big support level back in 2012, and then in 2013 it messed around with this area and used it as a catalyst for the massive rally up, and that's exactly where we are again. So if the market cannot hold below it, which it doesn't look like it's going to, if the market can't hold below it and it gives us a signal to go long, we're going to take this entry long with initial targets around the 1.5600 level. And if we can get above there, then we're opening up the trade to 1.5729. We'll have to wait to see how that sets up next week as well. But a good potential trade there. We'll be taking that from the 4-hour. And then finally, we've got the pound CAD. Now, the pound CAD has just recently broken through a huge level. The trade isn't setting up at this exact moment, but if we zoom in here, what we're looking for, and it'll probably be on the 4-hour time frame, but what we're looking for is the market to pull back to that level. So pull back to the breakout level, hold the level there, prove to us that it doesn't want to go any lower. And if it can do that, and then gives us a signal to go long, we'll be taking that with our stop with our stop below the lows. Okay, so that wraps it up for this week's Forex Focus. I hope you enjoyed what you saw there. I hope you found value in it. Remember, it's for educational purposes only. We're not telling you that you have to take a trade. We're not authorized or regulated to give investment advice. So this is purely for educational purposes. We're showing you what we're doing with our portfolio, showing you the setups that we're looking to take, and hopefully you will learn from this and you'll do your own analysis and come to similar conclusions and find other opportunities in a similar way. So if you like the video, again, please give it a thumbs up, subscribe to the channel if you haven't already done that. And until next week, thank you very much for watching and good trading.